There's a lot of hopes riding on the Federal Reserve, which begins its two-day meeting tomorrow, that they might say something soothing in the statement, that they might use it as a communications tool. Greg, do you buy that? And do you think that the market is likely to be surprised in a negative way if we don't get it?
Look, I think they've been quite transparent on what they're looking at and where they're going. And our perspective is their forward-looking outlook and a gradual rise in rates is to be expected. I think they will keep a strong eye on the U.S. economic data. But again, those numbers continue to support continued tightening.
So you think they're going to go through with it? The tightening as planned for interest rate hikes this year? The market's telling us that's not going to happen.
I think over the next 12, 18 months, whether they raise tomorrow, consensus they won't, but our perspective is that over the next 12, 18 months, they continue with their path.
I wonder, Kevin, what that would do to the equity market, especially because it's not being priced in to the bond market and the futures market right now, and on the potential for a surprise in the statement tomorrow.
I don't think you get much of a surprise in the statement tomorrow. I think the Fed has been trying to hold on to this idea that the economy is getting better, the unemployment rate's coming down, the inflation dip has been transient and based only on energy. And I think they're going to want to continue to move forward. They're not going to use tomorrow as a pivot point because it's just a statement. It would be too risky for them to do that. But what I would say is if the data continues to worsen, when you look out to March, you're going to have not only the Fed with a full meeting, but you're also going to have the ECB and the Bank of Japan looking to do something or potentially do something. So I think that becomes the more important focal point for markets.